Hello everyone, PS from PS Invest plays here today. In 2020, Enphase Energy stock had risen 500% and it had risen more than 50% until November 2021. Since then, it has shed 30%. Many analysts think that it is still overvalued. Is this true? Or can we expect higher stock price in the future? In this video, we will understand its business, its financials, its future growth outlook, and review its chart using Elliott wave to see how we can make money. So, stick around. I think you'll like what I have in store for you today. Enphase Energy, ticker ENPH. Enphase Energy is an American NASDAQ-listed energy technology company headquartered in Fremont, California. Enphase designs and manufactures software-driven home energy solutions that span solar generation, home energy storage, and web-based monitoring and control. It develops micro-inverters for individual solar panel installations in the US and globally. The micro-inverters allow energy conversion at individual solar panels while providing energy monitoring and controls for individual panels. The system maximizes the total output of the solar panel system while also enabling expandable solar panel configurations. The company sells to homeowners, commercial users, and manufacturers through D2C, B2B, and distributors. Enphase is currently the market leader in solar inverter technology with a 48% market share in the US in 2020. After being near bankruptcy in 2016, Enphase went into major restructuring in 2017 and acquired the microinverter business of SunPower. As a result, Enphase's revenue growth turned positive in 2018 while innovating new products. The chart below shows that the firm quickly recovered from 2020 closures and continued its quarter-to-quarter growth momentum. Enphase Energy's business activity is not broken down by segment, but by primary geographical market. The US is the firm's primary market, constituting 82% of total revenue in 2020, while the international market accounted for only 18% of the revenue, despite a 36% growth in 2020. Enphase recorded robust revenue growth in the past 5 years at a CAGR of 30.78%. In Q3 2021, Enphase reported $351.52 million in revenue, representing an increase of 11.2% quarter-over-quarter and 196% year-over-year growth. In addition, Enphase sold 2.5 million micro-inverters in the same quarter, a rise of 10% quarter-over-quarter and 80% year-over-year. Furthermore, the company guided Q4 2021 revenue to be between $390 to $410 million, higher than consensus estimates of $374.5 million. In addition, Enphase has also been consistently outperforming consensus estimates over time. In Q3 2021, sales in the US accounted for the majority of Enphase's revenue at 76.1%. It represented an increase of 177% from Q3 2019 levels. Internationally, Enphase sells most of its products in Europe, and its microinverter has been installed in more than 130 countries. Enphase spent an average of 5 to 10% of its annual revenue on R&D, which amounted to $29.4 million in Q3 2021. It represents an increase of 29.5% quarter over quarter and 196% year over year. As a result, I expect Enphase can maintain its technological expertise in the micro-inverter market. Enphase's revenue is expected to grow steadily in the next 4 years at a CAGR of 28.45%. In addition, the company is also estimated to grow its EBITDA faster at a CAGR of 32.81%. The company also expects to increase its serviceable available market from $4.1 billion in 2020 to $14.1 billion in 2023 at a CAGR rate of 20%. With high federal government support for clean energy, credible secular tailwinds are underpinning Enphase's future success. Furthermore, the global microinverter market is estimated to increase to $6.5 billion by 2025 at a CAGR of 20.8% over the next 4 years. The Solar Energy Industries Association, or SEIA, also reported that the solar market experienced massive growth at a CAGR of 42% in the past decade. The installation cost has also been reduced by 50% from $40,000 to $20,000 for an average sized residential system. The energy generated also achieved parity with other forms of generations at a range of $16 per megawatt hour to $35 per megawatt hour. Enphase Energy is developing new products, enabling it to boost its growth in the upcoming period, as it will start ramping up shipments in December. New products are expected to increase the serviceable available market, or SAM, from $4.1 billion in 2020 to approximately $14.1 billion in 2023. Enphase Energy is not only growing its revenue, but also its profitability. The gross profit margin expanded from 30% in the second quarter of 2018 to nearly 40% in the last quarter. Other profitability ratios experienced material improvement following the restructuring, which goes beyond its baseline financial model: 35% gross margin and 20% operating income. On the balance sheet side, liquidity and solvency ratios have improved, allowing the company greater flexibility in implementing new initiatives and leading to potentially more robust cash flows in the upcoming period. When plotting the asset turnover ratio against the ROE of the top 10 companies in the electrical equipment and power systems industry, Enphase is above average, implying higher quality than its peers. Looking at the financials of Enphase Energy, revenue, gross profit, EBITDA, net income, EPS or earnings per share are increasing considerably quarter over quarter and year over year. If you discount 2020 and compare the 2021 financials against 2019, they have increased by a very good clip. Although Enphase Energy has a bright outlook per my analysis so far, it is exposed to different risks and challenges. The company is over-dependent on the US market, which constitutes 82% of its 2020 revenues. The company's accounts receivable might be subject to a credit concentration risk. In 2020, one client accounted for nearly 36% of total AR. In 2019, 3 customers accounted for 59% of total AR. The company is currently trading at a relatively high valuation ratios compared to the industry. Trading at high valuation ratios makes the stock sensitive to earnings surprises at each quarter release. Finally, the global shift towards greener energy sources is a long-term trend, driven by government incentives, business compliance with ESG standards, and global awareness. Enphase Energy appears to be well positioned for the upcoming growth in the solar energy industry. The firm has a leading position in this thriving US market, with new innovative products presenting a potential growth catalyst for the upcoming period. Moreover, its business model proved to be efficient and delivered outstanding financial and operating results during the last 3 years. There is little doubt that Enphase Energy stock is a solid stock. I think investors who have a long-term investment horizon should take this opportunity to buy the dips. This is also indicative in the charts, where I see the stock price to experience some further pullbacks before it increases considerably in the next 2 to 3 years. Now, let's take a look at the chart of Enphase. Sorry for the interruption, but I wanted to take a moment to remind you that if you like this video, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. With that said, let's get back to our analysis. Looking at the chart of Enphase Energy, the bull run that started way back in 2017 is still not over. It has completed its first 4 waves, and now wave 5, which is an impulsive wave, is in progress. If we look deeper in wave 5, we can see that it has completed its first 2 waves, and now wave 3 is in progress. Within this wave 3, it has completed its first wave, and now wave 2, which is a corrective wave, is in progress. In this wave, I see strong support at $164.14 and strong resistance at $175.58. After this corrective wave is completed, a strong bounce in the price of Enphase Energy stock should appear. This correction does not mean that the bull case in Enphase Energy stock is completed or is over. Wave 3 is typically 200% of waves 1 to 2, giving us a short-term price target of $329.84. After wave 3 is completed, I expect wave 4 to resume, which is typically 23.6% retracement of wave 3, giving us a short-term price target of $285.33. After wave 4 is completed, I expect the final leg up, which is wave 5, to resume, which is typically 61.8% of waves 1 and 3, giving us a final price target of $422.08, which translates into a profit of 109% in the next 2 to 3 years. Now, let's summarize. At its current price, I would recommend that you nibble any pullbacks and accumulate corrections. For me, the accumulation range is a price between $164.14 and $175.58. After this correction is completed, I expect a strong bounce in the Enphase Energy stock, and I would recommend that you hold the stock for at least 2 to 3 years, as I see a final price target of $422.08, which translates into a profit of 109% in the next 2 to 3 years. What do you think of this analysis? Please leave me a comment and let me know. As always, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. With that said, bye-bye.